Good day, fellow investors. Now, a great comment here by Harry Pocha discussing how the US market is going insane, and Sven is commenting on the most irrelevant stocks and topics with my stock analysis. Some says it's not an irrelevant stock because it's unliked by the market, but me not discussing the stock market is the greatest compliment I have had in a comment so far. So Harry Potter, thank you very much. And in this video, I want to discuss the difference between commenting on the hottest stocks, just want to see what Jeremy is doing, and you see that the 6 stocks I'm buying, of course, Palantir, PayPal, and all the hot stocks out there, because those hot stocks lead to views and views lead to money. Most YouTubers do that. I'm doing it in a different way. I want to discuss interesting risk and reward situations, researching stocks, and then if you feel that what I do can be valuable to you, save you time, value investing, risk and reward focus, then you buy my research platform. So of course it's all about the money. We donate YouTube proceeds, we build schools in Nepal and locally. So that's what I do. If you don't like it, I can't help you, but I'll just keep doing it. Anyway, back to investing. I want to discuss whether what's going on with the market is important or not versus real investing. What's the difference there? It's the key thing, I think, for investing. So just take a look at the S&P 500. If you look over the last 40 years, it's up 2,505%. From 2007, it's up 183%. So not even that spectacular, but over the long term, you can say that stocks go up. And over the last few months, the market is up 22% from the bottom. This was the bear market here. October, the bottom, and all those that bought made 20%. And now everyone is saying how the stocks only go up, and we are back to whatever is going on there. However, I want to discuss the difference between investing and everything else. So 1,500, 3,000. So let's say this is a 3x over the last, 16 years. What is investing? This is perhaps the most important chart. This is the dividend in points for the S&P 500. 2007, the dividend was around 40, and now it is around 70. So it's up 1.8x while the market is up 3x. What is extremely important here? When you're an investor, you focus on cash flows. Warren Buffett bought Apple. He was buying it between 2016 and 2018. Does he care about this? No, he doesn't, because he is not going to sell it. So whatever the value of Apple is irrelevant to him. What he cares about is that the P ratio here was 10, and the cash flows when he was buying thus were already around 10%. The company grew those 10% to 20, 30% now. He's getting a dividend, and the company is using those cash flows, unfortunately for Buffett, at very high stock prices to do repurchases. But he will eventually own more and more of Apple. The cash flows will be higher and higher on his purchase price, and that's about it. Whether this now goes to 100 or back to 50 doesn't make a change to Warren Buffett, because he is an investor. Of course, if you bought here and you sell now, you will feel like the most genius investor in the world, and you have the right to feel like that, but that's not investing. You can see here for the dividend growth of the S&P 500, there were periods with 5% growth. Of course, now per S&P 500 share, it's a bit higher. Given all the buybacks, there will be lower periods, higher periods. But if you look at the dividend of the S&P 500, the dividend yield, the question is, from an investing perspective, are you happy with this 1.55% if you invest? Do you want more or not? And yes, this 1.55 might grow at 7% per year. So in 10 years, it will be 3%. That is investing. Betting that this will be 5,000 or 3,000, that's speculating. And that's how you lose your shirt every 7 years. That is why we'll comment, because it leads to views. Views might lead to new customers for my research platform, more money for my charities. So I will make a video about that tomorrow, or I already made it yesterday. So just for money purposes and YouTube algorithm purposes. But in general, why I don't comment on what you can read in the news? Because I'm not interested in this 1.55%. I'm simply not interested. I have nothing to add there. It can go up 20%, it can go down 20%. I don't care. I focus on my businesses, their dividends, their growth, their cash flows, and how those compound over time. That is where I will get my return, no matter what happens with the market. That's investing. Everything else is speculating. I think that 1 to 2% of the population can understand that. Those are my subscribers. And thanks for watching. I'll see you in the next video.